Hello and a very good day everyone. We are from Group 9 and we are going to present to you about a case study related to ethical issues. These are the elements that we will discuss in this video. First, we will start with the illustrations of the case study, moving on to the key risks and procedures related to the issues. Next is the ethical issues which raised in this case, and the fundamental principles that could be affected by the ethical issues which raised in this case, and the potential threat raised in each ethical issues, along with the safeguards to reduce the threats to an acceptable level. It's a great pleasure for me to introduce our presenter today, who is going to talk about ethical issues and all elements that have been mentioned before. So now, meet our first presenter, Mr. Wan Sharil, and Miss Nitya Sini, and me myself, Anis Yasmin.
Before we go any further, let's get to know our accounting firm and the client. Ahmad and Ali Limited Liability Partnership are performing the audit of Walt Line Berhad for the year ended 31st December 2020. Ishraf Zakaria graduated from University of Malaya and having 3 years audit experience has been appointed to perform the audit engagement. As a team leader for the engagement, he found out that his audit team were facing issues that need to be resolved before completing the report on the financial statements. Now, let's get to know the client. Wat Line Berhad, or known as Watt, is a manufacturer of electronic appliances which focus on manufacturing milking machines used in the agricultural sector. Recently, in March, the company decided to implement Internet of Things, or known as IoT, in their manufacturing operations as to increase the productivity and decrease the complexities of its process. The Industrial Internet of Things is a conglomeration of technologies such as big data, machine learning, sensor data, cloud integrations, and machine automation. These technologies are used in fields including maintenance, real-time supervision, resources optimizations, supply chain visibility, cross-facility operations analysis, and safety, allowing the operational managers to reduce downtime and improve process efficiency. Azman Hashim, the finance manager of Walt Line Berhad, provides the auditor with the following information. First, the draft of financial statements represents an amount of 3.2 million ringgit of profit before tax in 2020, but in 2019, there is only 1.5 million ringgit profit and a total asset of 40 million ringgit. Ahmad and Ali were appointed as auditors to Wat Line Berhad for the first time in January 2021. Wat had exclusively designed, constructs, and installs milking machines referred to the customer's preferences. The payment is due in 3 installments, whereby in the first stage, the customers will make a payment of 50% when the order is confirmed. Meanwhile, in the second stage, the customer will pay another 25% on the delivery of the milking machines, and finally, when the machine is successfully installed in the customer's farm or milk factory, the balance of 25% due will be paid to the company. The customers are allowed to pay for their purchases either using cash or debit or credit card. The business has a high potential to grow as there is a niche market for selling the milking machines in agricultural sector. Several key customers including Awan Farm Berhad, Saval Farm Berhad, Napier Berhad, and many more made full payments on the price of the machines at the first stage when the order is confirmed. On 3rd September 2020, a key customer, Rainbow Farm Berhad, declared of having financial difficulties and informed the clients that the company is unable to pay the remaining of the contract price, which include payment on delivery and payment for installations. The terms of the agreement allow terminations of the contract, but there shall be no refund which is required to be paid to Rainbow from Berhad. The auditor is informed that in earlier months within the fiscal year, the director of Wat Midline Berhad agrees with the new policy of giving warranty to the customers. Therefore, all making machines supplied carried 1-year warranty. Unfortunately, since it is such a new policy in the company intentionally made no declarations on the provisions of warranty in the book of accounts at the year end. In December 2020, the business was not in a good term due to the spread of coronavirus disease, but Wat Midline Berhad planned to expand their business and open new manufacturing factory in Johor. A new loan application has been submitted to the bank to fund the construction of the new factory. The bank asked Wat Midline to send them the audited financial statements for the year ended 31st December 2020, together with the annual budget, profit and cash flow forecast for the years to come in respect of the proposed expansions for examination. The financial manager proposed in respect of this engagement that first, Ahmad and Ali has responsibility in making recommendations and consultations to the managers and finance department in preparing and presenting the profit and cash flow forecast to attract the bank attentions upon agreeing to their loan application. Secondly, the accounting firm Ahmad and Ali audit fee along with the consultations fee will only be paid if and only if the bank agrees to approve the bank loan application. The auditor has no choice. They need to agree with the financial manager's proposal because they think that the company should have been paid under any conditions. Plus, we could see that the accounting firm had been slowed down due to the last number of clients for the year of assessment. Knowing such issues, Wat Berhad is offering loan to fund the business expenses. If the loan can be secured, then Ahmad and Ali can still survive in the industry and participate in more engagements with more clients, which also include Wat Berhad. During halfway of the audit engagements, the accounting firm Ahmad and Ali were asked by Wat Midline Berhad to provide an IT service regarding their daily sales transactions in their company software because their accountant who is in charge took a medical leave for 1 month and not present during the audit engagement to make the required changes, and no one in the company knows how to do it. Based on the case above, we will discuss about the key risks and procedures related to the 3 items of the financial statements and issue. Secondly, we will discuss about the ethical issues that raised in this case. And third, we will know what is the fundamental principles that could be affected by the ethical issues raised in this case. Fourth, we will know how or what is the potential threats raised in each ethical issues. And lastly, what is the necessary safeguard to reduce the threat of these issues to an acceptable level. Now, I'd like to pass the floor to the next presenter.
So next, we are going to be discussing on the key risks and procedures in the audit of Wat Midline Berhad. So the first key risk is the provision of warranty. This can be identified when the company did not declare provision for warranty in the year end. This breaches the IAS 37 provisions, contingent liabilities and contingent assets, where it should be recognized and needs to be declared as a warranty provision. This involves the risk to understate the liability and expense and overstate the revenue and profit of Wat Midline Berhad. And the audit procedures that can be done to address this risk is, firstly, is to discuss and inquire the management of the company on policy of the provision for warranty by the company. Second is to recalculate and reevaluate the provision of warranty policy of Wat Midline Berhad and the amount that should be included in the books for the fiscal year end. Next is to review and test the process used in developing and executing the warranty policy in Ward Line Berhad. And lastly is to review the board minutes and disclosures of the company on warranty provision related matters. The last key risk is the account receivable, because one of the company's significant customer was declared to be going into administration and thus cannot pay for its remaining due. The asset recorded relating to this customer can be overstated and the bad debt recorded can be understated. Thus, the procedures that can be done to address this includes the review and the re-evaluation of the previous bad debt that has been written off. Second is inquiry of management and the personnel accountable to record the bad debt regarding the policy of allowancing and writing off the bad debts. And lastly is to test invoices from receivable aging report and compare to supporting document related to account receivable. That is all from me. I'll pass to the next presenter to discuss on the ethical issue. Moving on, the next key risk is on revenue at which the payment received in advance for order of recognition before any work has taken place. Significant amount of performance obligation has yet to be fulfilled, and this practice may risk the revenue to be overstated and liability to be understated. So, the audit procedures that can be done to address this risk is to trace the receipt of 25% and 50% of the contract price to deferred income. Next is to reconcile the cash receipt relating to the contract with the bank statement of the company. Thirdly is to recalculate the revenue that should be recognized in the 3 stages of payment, which is upon the order confirmation, delivery and installation of the machine, and based on the performance obligation. And lastly is to observe and review the contract terms to assess the terms involved that affect the payment stages in the contract.
Alright, now I'll continue with ethical issues, fundamental principles, potential threats, and safeguards. We are going to see section 360 first. We'll start with ethical issues. So, according to section 360 MIA by law, audit team are required to comply with the fundamental principles, standards, and laws and regulations. Any non-compliance of any laws or regulations should be disclosed by the audit team. In this case, Wat Milk Line Berhad did not follow the compliance in recording the provision for warranty according to how it should be, thus creating an ethical issue to Ahmad and Ali PLT. So moving on to the fundamental principle. So the fundamental principle that is affected by the action of Ahmad and Ali PLT is integrity. This is because they're not being honest and they are actually not complying to the audit client and not acting on the misstatements. Other than that, professional behavior of the audit firm is also affected as they're not fulfilling the duties of the profession to protect the interests of the stakeholders. So moving on to the potential threats, the ignorance over non-compliant issue might actually cause some intimidation threat. Given that Ahmad and Ali PLT are struggling in the business, the firm might not want to risk losing its client. Thus, if they issue a modified opinion caused by such non-compliance, the client might switch over to other auditors. Thus, indirectly, the firm are intimidated by the client due to their financial situation itself. So, to the safeguards in which to deal with this kind of threat is actually the audit firm shall reduce the dependency on a single client to cut their leverage on the audit firm. And moving on, the audit team should consult with the partner and upper management within the audit firm for the engagement session. And also, if the audit team still could not reduce the threat to an acceptable level, therefore the audit firm should put into account to resign from the auditing that company to remain their objectivity and integrity. Alright, let's move on to section 511. So according to section 511 MIA by law, the ethical issue is that a firm or any of the audit team member or immediate family of the audit team members are not allowed to accept any form of loan or have a borrowing guaranteed from the audit client unless the audit client is a bank. And the loan or a guaranteed amount is immaterial to the audit case. In this case, Wat Milk Line Berhad is offering Ahmad and Ali a loan to make sure the audit firm sustains, and it gives a meaning that the audit firm is having a material financial interest in the client's company, and this act may actually cause a threat. So moving on to the fundamental principle, which is the fundamental principle that is affected in this issue is independency, since the audit client can be assumed to have undue influence over the auditor. Moving on to potential threat, this issue has actually brought upon a self-interest threat over the audit engagement, as the client provide the loan to the auditor. The auditor might omit certain misstatements performed by the client to protect the relationship with the client in respect of the loan or loan guarantee provided. So what are the safeguards that can be carried on is actually the audit firm actually shall withdraw the engagement with the audit client, as the audit firm has significant financial interest in client's company. This is where it's actually done is to protect the audit firm's independence when expressing opinion regarding on what milk client's financial statement. Alright, moving on to section 606. So according to section 606 MIA by law, audit team are not allowed to provide information technology system services to an audit client, which in the end might create a self-review threat. In this case, Ahmad and Ali PLT were asked by Wat Milk Client Berhad to help key in the daily sales transaction in the system because the accountant in charge was absent, and this might actually create a threat. So the fundamental principle is that the issue that has affected the fundamental principle of the auditor is on the objectivity, as the auditor actually might perform audit over the work they perform themselves instead of the client's management representations. And the next fundamental principle of the auditor is the independency, as the auditor actually might involve in material bias, as being the one who actually perform the information technology system services in the sales transaction, and yet they need also audit the same part. So moving on to the potential threat is where the information technology services from the audit firm on the client have actually created a self-review threat, because at the end of the day, it is the auditor that is actually performing the assurance over such work. Thus, it is not appropriate and irrelevant that the auditor provide assurance over their own work. So one of the safeguards that can be taken is that they can actually ensure that the audit team, at the first place, they should reject the proposal of the client to provide IT system services in regards of financial statement. And the audit team also should recommend to the client to appoint third party in performing the IT system services on behalf of the employees, especially on this case is the employee who was absent. And the last is to discuss about the independency issue with the board of directors as well as the audit committee. Furthermore, these are the references that we have used to do this assignment. And moving on, that's all from us. Thank you for listening, Doctor. Have a nice day.